Alright, hello, and welcome to Camel Finance. I'm your boy Camel, and printer is coming. So stupid. If you don't know what I'm talking about, then go and watch yesterday's video. The Fed is going to print to save the market. There is an emergency Fed meeting being held today, so I will make sure I update on this as soon as I can. I don't know if we even get the outcome today or at all. I imagine at some point we will, but I'm keeping a close eye. I'll make sure I report on this as and when I can. However, if you haven't seen this, I do encourage you to go back and watch that because all the pivot stuff and macro is in there. Just before we get into today, I wanted to make a quick point. I saw something like this. I'm not picking on this person, but after Ethereum, what is another altcoin to hold? As if Ethereum is some sort of guarantee. As if Ethereum is some sort of perfect blockchain. We need to start facing the elephant in the room. We need to start addressing these issues. Okay, one more example, again, not picking on anyone. Do you think DOT could flip ETH? Okay, and there's overwhelming people saying, no, it couldn't, blah, blah, blah. Let me just point out a couple of things because somebody has to be the adult in the room here, okay? ETH is probably going back to the C19 lows at around $200 a coin. Now, this is where the conjecture and speculation from me stops, okay? That's my opinion. I can't prove that to you, but everything I'm about to say from there on, I can prove and I have proven on the channel. So, proof of stake has killed this chain. The chain is pwned to mean controlled and dominated. It will tend to inflation over the longer term because that's what proof of stake mechanisms do. What is the point of a centralized blockchain that can be inflated? Let me ask you again, what is the point of a centralized blockchain that can be inflated? We already have fiat, okay? Not to mention they're building CBDCs on the public Ethereum. The chain is done, okay? And, oh yeah, not to mention the disguised whales that hold 70% of the supply that was pre-mined and given to them. Now again, this is not conjecture, this is not speculation. I've proven this. If you go on my channel and watch things, I think the video is called something like Ethereum is dead. I've got another one that says bullish on Ethereum. I've proven this over and over again. And don't even take my word for it. Just go and look this up. You can type in disguised whales, ETHgate into Twitter and you'll find all of this stuff. There's even videos of people like Joseph Lubin talking about how they disguised the whales. And some of the reason they did this because they didn't want people to know that only a handful of people controlled all of the pre-mined supply, which is nearly 70% of all ETH, by the way. And on top of that, they had to disguise these whales so that they could get around one of the prongs of the Howey test, which would otherwise show that Ethereum is an unregistered illegal security. So again, this is not conjecture, this is not speculation. These are the cold hard truths. Somebody has to be the adult in the room. This is not a popular opinion. But this is the facts, okay? There are disguised whales that hold 70% of the supply that was pre-mined and given to these small handful of entities. They can use it to change the protocol at will. They will use it, or at least they can, to censor some transactions. I'm sure we're going to see that coming in the future. They certainly can use it to censor transactions. Again, not conjecture, not speculation. And I want to ask everyone, if you think you're bullish on Ethereum, if you think this is a good coin, let me ask you this. What's the issuance schedule on this coin? Yeah, you don't know. You know why you don't know? Because nobody knows. They haven't figured it out yet. Okay? This is not sound money. This is not sound money, and it is time to be the adult in the room and start to address these issues. So I'm sorry if that triggers you, but these are the facts. And don't take my word for it. Please, please, please go and research this. Let's move on to perfect money like Bitcoin. Bitcoin is growing at a faster pace than the internet, and there will be 1 billion users by 2025. Okay? 1 billion users. That's a 10x from 2021. Let's do some fun math really quick, okay? Bitcoin and math. The 5-year credit default swaps, which is like insurance on debt default, is 29 basis points. So that means it costs 29k a year to insure 10 million of debt against default. The total federal debt for the USA is 31 trillion funded, and then there's another 170 trillion unfunded debt. The 20-year credit default swap equivalent is 120 basis points. So that means that on their 200 trillion of debt, that's $2.4 trillion per year in premium. Now, Bitcoin only has a market cap of $368 billion. This means you're getting default insurance on the USA for 85% discount. Okay, the $368 billion market cap divided by the $2.4 trillion premiums. Plus, you're getting insurance on all other fiats going to zero for free. Or, said another way, the intrinsic value of Bitcoin due to the USA default risk is 2.4 trillion from the premiums divided by 21 million coins, because that's the hard cap supply of Bitcoin, gives you 114k per Bitcoin. And at the moment, it's trading at 19,000. Okay? Bitcoin is cheap insurance on a fiat Ponzi scheme, and Bitcoin is an IQ test for risk. Global debt as a percentage of GDP is starting to trend up again. This is not going to go away. This is not going to stop. The debt is only going to snowball from here. We might have had a pullback, but believe me, it's only going to trend up, and we're continuing to see this even more worryingly as a percentage of GDP. The debt is snowballing while GDP, whilst economic growth is declining. And as growth declines, as risk skyrockets, people are going to start to work out that they want and that they need a hard and perfect form of currency like Bitcoin. You can see here, if Bitcoin can capture small percentages of everything that is currently used as a store of value, we could be at over $200 trillion with relative ease. This would put one Satoshi at parity with $1. Said another way, that is a $10 million plus Bitcoin price. In 10 years, your house will not still be worth around 25 Bitcoin, and it likely won't even be worth 1 Bitcoin. Here's a real world example for you. Inflation in Turkey is 84%, and the president wants interest rates to cut to a single digits by the end of the year. And what's the result of this? Well, the result of this is people rush out to buy hard forms of money. Purchases of gold and other precious metals in Turkey rose 389% in August. Is this a coincidence? Of course it isn't, and they will also be rushing out to buy Bitcoin. We also saw this in the UK last Wednesday, when the Bank of England pivoted to quantitative easing and unlimited bond buying in order to bail out the pension funds that were getting margin called on their over-leveraged bond hedges. And the result was Bitcoin volume traded against the GBP, Bitcoin pound pairing. The volume went up 1100% in a single day as more and more people start to work out that they need to exit the system. You can see here, we are on track. We are just about to start the next cycle. Conservatively, we should be hitting 200,000, and numbers well above that, like 300,000 or 400,000, are certainly possible. As I already mentioned at the start of this video, there is an emergency meeting happening today. The Fed could certainly pivot to printing. I don't know if they will or not. I don't know how anybody could know that at the moment, but I do know that they must be getting close to having to turn these printers back on. I will not be surprised if we see these printers come back on very, very soon, as we've started to see from the Bank of Korea, the Bank of England, Germany, Japan. The ECB will likely be forced to pivot soon as well. But if the Fed doesn't pivot right away and continues to hike rates, this could cause the US dollar to get stronger. And this could put pressure on gold, silver and Bitcoin prices to go lower. If this is the case, buy more. When the Fed pivots and drops interest rates, just like England just did on Wednesday, you will smile while others cry. This is absolutely true. I actually believe the lows are in for Bitcoin, but I do have a public short position on precious metals. It's been a while since I talked about CPI, or relatively long time anyway. I think it's only been a couple of weeks, maybe less than that. But one thing I can see for sure is that M2, denoted in the black line, has fallen off a cliff for now. And therefore, we should expect CPI, although it does lag a bit, we should expect CPI to start coming off. So if the Fed can manufacture one of their CPI numbers, or we can get a significant drop down to this 3 or 4% range for CPI in the next reading in a week or two, that could give the Fed some shred of credibility and allow it to pivot without looking like it has completely lost control. Of course, one thing we know about Fed credibility is the Fed credibility is transitory. Stocks in the S&P 500 in a correction, 50-day moving average has just triggered a rare signal. So this is down here in the green. These levels have proved to be exceptional accumulation opportunities all the way back since 1994. The only exception was in 2008, and a lot of people are calling for this right now, but I've got a couple more slides to show you that suggest that a lot of retail investors, a lot of shorts, are on the wrong side of this market. Smart money, dumb money confidence shows that there is an enormous divergence in smart and dumb money. The smart money is loading up, whilst dumb money is sitting out. Which one is going to be right? And at the same time, small traders just keep loading up on puts. These are hedges, these are options that profit if the market declines. We've now seen record put buying since 2000. So are they in for massive payouts or record losses? The VIX is kind of telling us that if we can get below this trend line here, this top blue trend line, we have likely seen a short-term bottom in the stock market. We do have to be mindful because the daily cycle low is not due until around the end of the first week or early second week of November. And of course, a Fed pivot could force an early cycle low. But for now, the dominant trend is down, and we do know that we are only about halfway through this daily cycle, so it is perfectly reasonable to expect further downside in the short term. I continue to wait patiently for a breakout on the FTSE 100, as you can see here. Breakout retest resumption will be a long from me, so continuing to line this up in the short to medium term. I've said this before, I'll say it again, I think it's time to load up on Coinbase into this 60-day cycle low around the 11th of November. So I called this all the way back here. We got a little false dawn, and now it seems like we're going to be behaving as we should. So I'm lining that up, and the same is true of MicroStrategy, as you can see here. So again, for long-term accounts, I think this is going to be a really, really good entry. Oil is thinking about breaking out, so we'd like to see a breakout retest resumption here. We'll see how that goes. Getting ready to line this up as a long entry. Gold doing exactly what I want it to do here. That is slowly waddling. I think, what day are we on now? If we call this the cycle low, this is day 3. So I would think 4, 5, 6, 7, somewhere around here, another 3 or 4 days, and I think we could see this roll over, and then we will add another position to this long from in here. So make sure you're subscribed if you want to see me deal with that in real time. If we got a breakout above this blue trend line, that could be a long, but given where gold is and the positioning and how early it is in its weekly cycle, I think that gold likely has a lot more downsides coming back in. So if it's really bullish, it's such a slow moving market that it'll only really base out here, and then we can add at the end of the year, add our position back. So I don't think there's any need to rush into this position, and I do think you need to respect the risk to the downside for gold in the short to medium term. Bitcoin continues to trade like a champion, continues to move sideways, continues to hold above its June lows. That 60-day cycle is now only 39 sessions away, so that is coming into focus. We are looking forward to seeing a drop down into that cycle low so we can go long. Ethereum, from a trade position, looks like it wants to test these lows, and I wouldn't be surprised if it sort of does this into that cycle low for Bitcoin and then goes. So no trade out of this for me at the moment, but I will certainly let you know. We did really well capturing this move live on the channel, so hopefully we can repeat that with a little bit more patience coming out of this. XRP hanging in there, consolidating. So not much more I can do apart from just see what the market can bring. Still looking for scenario 2 to play out, which was, what on earth is that? Still looking for scenario 2 to play out, which is where we retest this and go. So hopefully that's what we can see. Have to be open to seeing some downside, but the only way that we can target the much higher numbers is to continue to push this trade and see what the market can give. So that is that. Dollar looks to be bouncing. So that's kind of what I would expect given the position and the cycle count of gold. We expect gold to roll over in the next couple of days, and so therefore I would expect the dollar to be bid up until perhaps when we can see the weekly cycle low form for gold and the stock market in November, and around the time for Bitcoin as well. That's around the time we'd expect Bitcoin, so I wouldn't be surprised if this sort of chops around and makes its way up to 120 into the second week of November, and then I think we can see a pivot and a true top. That kind of seems like what the cycle count read is anyway. Of course, the Fed can step in and pivot at any time, and that will force all of the lows to shift to the earlier side. And yields are, we've got a very, very clean trend here. So if yields can break down here, especially break down retest resumption, then I think we can call this a true top in the yields, and we should see the yields come off quite nicely. Again, a lot of this depends on the Fed, and I will be sure to update you as soon as I have seen the results from this emergency meeting. If you found value here today, I'd appreciate it if you could drop a like on the channel. Subscribe if you're not already. It's so close to 200 subscribers, so thank you. Really, really appreciate that. In the meantime, trade safe out there, and until next time, take care. Cheers. Bye.